Hi, dreamers. Today I thought I'd do a year in review of my options investment income and show you the detail behind how I earned nearly $50,000 in options. So I'll go through that detail, what I learned, and how I'll actually change my strategy for next year. So let's take a look. So what I've done is a raw export direct from Fidelity off of my Activities and Orders tab, just showing all of my options. And as you can see, the very first option I ever did was on the 6th of January of this year, and it was on Chevron. And so what I'm going to do is actually show you the summary of this, and in total you can see that I made $47,749 in options, but after $95 in fees and $1,240 in commissions, my total profit minus all fees was $46,414. So let me show you the detail of how I generated that revenue of $47,749. And here's the detail. I've got my ticker, my number of trades through the last 12 months, and my revenue generated. So the first one was AbbVie, and that's a position I never intend to sell. And so throughout the year, I've just done calls on the existing position that I have. And as you know, I'm very conservative with a delta of less than 0.2 and often less than 0.1. And you can see the consistency here across the weeks, given that I do weekly trades and there's 52 weeks in a year. And so you can see here, I did 47 weeks essentially and generated just over $900 in premium on that one particular stock. And I can pretty much tell you the story behind each of these. I did one put on Amazon in one particular week when Amazon dipped tremendously. And so I took advantage of that particular week on that extreme dip. This AQN call was because I had decided to go ahead and sell AQN as a position. And so why not make some premium off of it in addition? I've done a couple of calls on Ben, but I've found that that makes me a little bit nervous. And the reason is because Ben is often several weeks in advance, and I've been nervous about financial stocks rebounding quite a bit. So after a couple of calls on Ben, I stopped doing those to let it run. The next one that I've done significant calls on have been BMY, and those have just been very conservative calls, and I've made a little bit of money there. A similar story with CFG, where I started doing a couple of calls there, but then backed off because I was worried that CFG, like other regional banks, would rebound quite significantly, which they have. The next one that I did quite a bit of calls on were CVX, or Chevron. And the reason why I stopped after 14 weeks was I actually decided to sell a bunch of my Chevron stock when it was above 180 a share, because I was predicting a dip after that. And of course it has. Duke is another one that I've done very little calls on because it also tends to be several weeks in advance. And that's just something I've found over the course of the year that makes me a little bit uncomfortable. Now, you probably noticed I did just a couple of puts on Google when, just like Amazon, it had an extreme dip in a couple of weeks in particular. And so I just took advantage of those extremes to make just under $300. Now, GSK is another stock like BMY, where I've just taken $1 here and there, and it added up to $58. Now, there's some tickers in here that you'll see I started experimenting just to see if I liked writing options on them. One was HBAN, which I just did one particular trade. IBM is another position that's been significant for me, and you can see I did 40 out of 52 weeks and generated just over $800. I've also taken advantage of the volatility in IIPR, generating just over $960 off of 9 trades in particular. I've done significant trades in about half the year on MetLife and generated over $500 on that position. But I backed off on calls on MetLife on the back half of the year because of it being a financial and insurance company, and I was anticipating a rebound and didn't want to limit that upside. So let me pick and choose the rest of these to tell you the story. You might be surprised to see that I've been skimming the cream off the top of Mo and just generating another $364 off of very safe trades there. MPW is a REIT that was very volatile this year, and I started thinking about selling it very early in the year, and so got pretty aggressive with my calls. and made another $600 off of 15 weeks. Now, Microsoft was another position I did some pretty safe calls and puts and generated about $135. You know, Realty Income is one of those where I have a ton of shares, and so that's something I could be attacking every single week. But I've just found that this one makes me a little uncomfortable because the X date and the announcement dates are so incredibly often. And as you know, which I've talked about in another video, one of my rules is not to write options on a week that it's an X date or an earnings week. And this just comes around so often, it makes me a little bit nervous. So after doing just one call, I decided to back away from that one. Now, recently you may have noticed that I just hit 100 shares in Pepsi. And so over the last couple of weeks, I've just done really safe calls. Now, Pfizer and Philip Morris have also been two positions that I've done consistent trades on. And you can see I've been a little bit picky on what weeks I wanted to attack Pfizer and Philip Morris. But I've made over $700 on each of those positions. Qualcomm is another one that's been actually really good for me. I've made option calls on 24 weeks and generated just under $780. Now, you may be surprised to see these 7 calls on Southern Company, which generated just over $330. And you can also see I've played around with SoFi just a little bit and made just a little bit of money there. And you can see here, I've actually been expanding my strategy on SOXL, which I made a dedicated video about, and altogether wrote 82 separate options, both calls and puts, as I wheeled this back and forth throughout the year across several of my accounts. And in total, with profit and loss, I made $25,747. And so one of the things I learned this year in options trading is to get good at a couple of positions in particular and really pay attention to that position, that company, and that industry, and just get really in tune with it. So even though I've been playing around and learning with a lot of the positions in my portfolio, that is a big aha that I had this year. Other ones to point out include AT&T, which I made 18 calls on and made an additional $750. And I did a similar thing with Verizon, as I noticed the telecom industry just having a terrible year in 2023. And so I made a lot of calls on Verizon as well and made another $800 there. But here's the other position that I really wheeled back and forth, and it was TQQQ, with 45 options, mostly puts, generating just over $11,400. And so in total, you can see that across 12 months, doing mostly weekly trades, I wrote 544 options, and all of them I was selling, never buying, which generated $49,519. But then there were a couple of trades that just didn't go my way. One mistake I made was betting on BNS, and that was just a really bad idea on my part. I made a call that was several weeks in advance, and in the meantime, the financial stocks started to take off. But the good news is that this is actually something that happened just in the last few weeks. And by this point, I was experienced enough to know that I would lose less by closing out that position than I would have lost across my entire position because the stock was rebounding so incredibly. And so I took the short-term hit on the close of the option and benefited from the price appreciation in the market. And so these were the bad trades that I had throughout the year, one on BNS, one on SCHD, and across 4 different ones on STWD, I lost $355 there. And so that brought me to my total of $47,749. So with all of that, what are the top things that I learned and maybe a change in my strategy for next year? Well, first of all, I think I'll be a little more opportunistic on extreme up and extreme down days. And you saw me do that a little bit with my Amazon trade, my Google trade, and my PayPal trades. And so what that means is cash secured puts on extreme down days for specific stocks and selling calls on extreme up days on specific stocks. So the first thing is about opportunistic plays. The second thing I would say is just regular run-of-the-mill every week, taking the cream off the top calls. That just worked really, really well. And so I'll be looking to build 100 shares and then being pretty careful and sticking to the rules of not doing it during earnings or dividend dates and sticking to a low delta, and I'll be fine. And what I might do is look for opportunities within my portfolio to quickly build to 100 shares so I can start writing options. The next thing I learned was how important liquidity is, and you saw me really focus in on SOXL and TQQQ. And so what I'm thinking about for the next year, which is something I didn't do, is try to build to 100 shares on SPY and QQQ, and then foreseeing some upward movement in the Russell and going after something like IWM and really just focusing in on maybe a handful of high liquidity plays. So that's a new strategy I'm thinking about for 2024. Another thing I learned was just be super aware of the macro trend and macro announcements. Certainly Fed days, interest rate changes, those types of macro announcements, because as you saw, I really got caught in that BNS trade, which was just a mistake on my part. And so that's really just an umbrella rule that you should always be aware of, especially if you're going to write options that are longer than 1 week, because sometimes you lose track of the fact that there's going to be a big announcement 2 or 3 weeks from now. And the last thing I would just say that I learned is I'm just not a fan of doing options more than a week away. For me, it just makes me more uncomfortable because, as you know, I'm very risk averse with my investments. And the other thing that I learned is there were times where I got a little bit too aggressive with my deltas, and I did go above the 0.2 into the 0.3 and 0.4 even. And I've got to say, that made me really nervous sometimes because you can really get burned on the swings. So those are some of the high-level learnings that will really impact what I do in 2024. And I hope that was helpful for you as you might think about wading into these waters and being really careful about it. Well, that's it for today, and I hope you enjoyed this year in review for my options. If you want a richer real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to use the link below to subscribe if you want, no pressure. And as always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I am not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.